Hey traders, Raghee here. Welcome to Charts and Coffee for Wednesday, August 18. Great to see everybody. Happy Wednesday, everybody. All right, so let's get into it. We do have the second big caution day today. Yesterday we had Powell speaking at 1:30, and that was after the 8:30 retail sales number. And then today, let's jump on over to the economic calendar. Today, Wednesday, we have some Canadian CPI. I mean, I've got some plays in Canadian dollar and in Canada. That's mildly interesting if you're in things like FXC or EWC, things of that nature. We do have building permits and housing starts. So when we don't have a lot of other data, something that would be considerably, say, sort of a low heat hot zone, a low impact hot zone, those will have a little bit more impact. I am looking at XHB having really in the process of reorganizing into a usable uptrend again. You can see here's your home builders. We get a big pullback here. I am looking at that for potential entries, mostly at the individual stock level. But that being said, depending on where your focus is at, different hot zones are going to have a different impact on that watch list and on those particular trades. And then we do have crude oil inventories. I do have a crude oil long position. Not interested in oil stocks yet, but I do have a crude oil long position, as well as a natty gas long position, which is really not going to be impacted by this. Tomorrow we've got natty gas, but then we've got the 2 p.m. FOMC meeting minutes. And that's what makes this a little bit of a hurry up and wait market, where we get to be sort of a fly on the wall in the last meeting and determine what it was that the Federal Reserve was particularly interested in, any kind of dissension, any other conversation, and any insight into the path to taper. Is it going to be September? Is it going to be by year's end? How much is that taper going to be? What is the pace of taper? So remember, taper is now a foregone conclusion. It's going to happen. What the question is now is how large is that monthly reduction going to be? And, remember, the Federal Reserve still has their foot on the gas pedal. Asset purchases continue to go up. We're still spending $120 billion per month. I mean, this is still a very stimulated, economic environment. They haven't let off the gas pedal. We're anticipating when they let off the gas pedal. So how quickly are they going to decelerate is the big question. All right, so let's get to our questions here. Thanks as always for being part of the Charts and Coffee crew. And the first question here is, hey there, Kip. Kip, every time I see your name, I'll tell you what, it's funny how names bring up memories. There was a guy I went to high school with. He was a friend, Kip, but his mom was one of the people who was part of the guidance counselor. So I was in high school, right? And I wasn't a great student. I was a pretty good student. My grades were good enough. And a lot of my guidance counselors saying, well, you're not going to get into this university. You're not going to get into that. And every time I see your name, Kip, I always think of his mother, who was like, Ron, don't listen to them. Apply, you'll get. And she was right. So every time I see your name, I always think about, her name was Mrs. Cranner. I always think about her every time I see your name. So it brings me such a happy feeling to think about her. So anyway, let's take a look at Dropbox. We need those people in our lives, right? The Mrs. Cranner. So people say, don't listen to them. You can do this, right? We all need those people. All right, so Dropbox. We got fielded agro, moderate, and conservative. Yes, we did. Do I have 3 different stop limits, or do I average the cost? Great question, Kip. So the way that we do position management, and really, what is risk management? Because you can't talk about risk management without talking about position size, okay? So with that being said, what we do is we have each level. And yes, you can have sort of a averaged out cost basis. And based on that number, if you were to lose 25% of that amount, if your premium evaporates by 25%, is that number greater than 5% of your account? That's a really good basic, sort of a baseline for risk management. And then that risk management is then going to apply to your position sizing, right? So you can have, I like giving traders the opportunity to free up cash when a particular level is just moving against us. It may not necessarily be mathematically, or even, a lot of people ask Rosh rule, Rog, do you care? I don't. My job is to put on the very best trades I'm capable of putting on. I've structured my life where I'm not worrying about trader tax status. That's a conversation for another day. But so I'm just trying to put on the best risk managed trades as possible. And that's the way I like to do it. So I think if you can cut loose aggro levels when that particular entry, that particular premium cost exceeds 25%, fine, right? Lighten the load, reduce the risk, take the paper cut. That's our mantra over in the Sector Secrets room. Take the darn paper cut. Am I right every time? No, luckily I'm right way more than I'm wrong, but I could be wrong about certain levels, right? Certain levels could exceed the risk that I'm comfortable taking. So I'm very comfortable cutting an aggro position loose and hanging on to moderate and conservative. And I hope that makes sense, Kip. That's very much a foundation of what we do in the room. Take the paper cut, take the small loss. I don't care what your position size is. This is not necessarily geared just towards traders who might be short funded or brand new. This is how I would talk to a trader if they had $10,000 in their account, $110,000 in their account, or $1 million in their account. Paper cuts are super important. I think what happens is traders get larger and larger in their account size. They actually think the size of their account can somehow let them trade through levels that they wouldn't have held when they had a smaller account. Always keep sort of a small account mindset, but rather than that, think about being a scalable trader. Think about that scalable mindset. Are the habits that you're developing in your $10,000 or $20,000 account scalable to 10 million? And if they're not good habits. That's the way I look at it. So is McDonald's, hey there, Debbie, is McDonald's on my watch list for possible entry soon? Negative, Ghost Rider. Yeah, no on that one, my friend. No. On McDonald's, no structure. I would say no. It's a choppy market. We can fade the upper and lower extremes. I would rather fade by this market, but no, my friend, nothing at McDonald's for me. Hey there, Chris. Good morning. Could I take a look at HG on the pullback this morning? So for those of you that are not familiar with HG, that is copper. That is also our very own Henry Gamble in the options room. But yeah, copper. Am I interested in copper? I actually am not. I was looking at a potential 1, 2, 3, which did a fair job of indicating the break of, or the continuation of a trend. But this is chop, right? Look at the yellow JT multi along the bottom. Oh, by the way, that reminds me, a lot of people ask me about these tools that are running on TradingView and TradeStation and Toss. I don't know if you guys have got the email already, but in 2 weeks, I'm trying to check when this is going to go down, but we have some live trading that's going to accompany my workspace bundle. So if you want all my tools, sans the HPMR, if you want all of them, that is right now available with 2 sessions of live trading. So the URL is kind of, well, ridiculous. I have to type out, but let's see here if I can put the URL in there. So yeah, for those of you that are curious, okay, Rag, yeah, I'm curious about some of these tools. It's Raghee-workspace-bundle. And you can check that out. But I think what's going to be really cool about when we do the bundle offer this time is the live sessions that will go along with it. So super stoked about that. Now, how does that tie into copper? What I want to do with copper is look at the V-score. I don't know that we're going to make a double bottom from a price perspective on copper, Chris. I think we could revert to the mean of the V-score as we have done before, but it's actually going to be a little bit higher this time. And this is where Price-based double bottoms, why are double bottoms sometimes uneven? Has a lot to do with volume sometimes. If this doesn't hold, this VWAP area and this mean, then I'm going to head right back down to this volume ledge. So it's really a zone we're entering. And I would say, Chris, we're in and I would not call this a pullback, because pullbacks are terminology that I will use exclusively with a trend. But this is a choppy market oversold buy conversation. This is where I could use a V-score. This is where I can use the V-score overlaid with my Darvis. You throw in a volume ledge to let you know where there is a lot of opinion waiting. This is where people have it's conviction there, right? At that level because of the volume ledge. And then for those of you that maybe have ready aim fire, you could use that, maybe a slow stochastic, but you're looking for this oversold trough. So pullback, no, but heading down towards an oversold support zone, yes. And we're at the aggro level of that right now. So thanks for the question, Chris. All right, next up, in searching for honey badgers, I came upon Crocs, okay? Let's take a peek, which looks like a pullback buy. I agree. Looking to get in here and exit before recent highs. Love the plan, Alex. So let's just go back for the group and at least talk about what a honey badger is. Now, generally speaking, that's a simplerism. It's a Johnism, actually, about a stock that's just doing its own thing. The whole joke about the honey badger video on YouTube is honey badger don't care. Well, Crocs don't care. August tumble, don't care. Potential for end of month rollover, don't care, right? That's the whole idea there. And so there's two criteria that I have found that allow me to find honey badgers in a process-driven way. Probably the most important is just that it's a relative outperforming uptrend. And that's clearly met with the double green JT multi. And by the way, the JT multi is included with the workspace bundle. Okay, we are including that. So I know a lot of you have been interested in that. V-score is included. Everything on the screen actually is included. Anyway, so the first criteria is a relative outperformer. I look at the JT multi, double green, check. The second criteria, to your point, and I love that you mentioned this, Alex, is that it's a honey badger because Crocs really isn't heavily weighted in the passive investing universe. It's not heavily weighted in actively traded ETFs. It's not a big part of any of the indices. So when the indices might get volatile or roll over, when it's going to take certain heavily weighted sectors with it at the ETF level, because Crocs has that nice distance from that involvement, honey badger, right? It's capable of moving higher even if the tide is going out at the index or sector level. So yeah, you can buy a pullback. 21 exponential has a nice volume ledge. So you could start that conversation right around 136.5. But then I would extend that conversation clear down to 131.80, 131.85 as well. And that lands you inside the wave. Thanks for the question, Alex. All right, next up. Hey there, Donald. Do I use a specific technical trigger on my swing positions, or do I use a zone? Yes to both. Are we using specific technical triggers to validate the trade? Yes, but is the trade valid at this individual line, the individual price? I don't believe so. I think the behavior of the environment is going to tell me my strategy and direction. And then the zone, which will require a technical trigger. I do want to see some sort of price-based indicator, usually. Volume-based would be great too, telling me that the levels, plural, right, that I am focused on could be reaction levels. And in the case of, say, a pullback buy, like the question about Crocs, but Alex's question about Crocs, I've got a 21 EMA, I've got volume working here, I've got the 34 EMA on the high, I've got, again, volume working here. All of that is happening within a double green structure. So the answer is yes to both. I think we always need some sort of technical trigger to validate the price trigger. I would like that. However, I don't think it's an individual level. I think it's multiple levels, or as you said, a zone. So yes to both. Any advice for the NASDAQ today? Well, I mean, I won't limit the advice to today, my overall opinion of the NASDAQ is it's a little lethargic, right? The NASDAQ was really the leader for much of summer. High beta, high momentum, tech stocks moving higher. The NAS, here's my advice for the NAS. Keep an eye on XLY. XLC, XLK, XLY. That's your trio of high concentration weighted sectors in a high concentration weighted index. So XLY has got to get out of its own way. That will help NAS. I think partially the reason the NASDAQ sort of lethargic here is that XLK and XLC continue to move, at least be supported and are moving in a double green environment. XLK more so. It's hard to hate on Google, and it's hard to hate on Facebook and Microsoft and Apple. That's XLK and XLC. Amazon and Tesla, by the way, hasn't participated all year. So remember, we don't need Tesla. A lot of times when you have high concentration weighted sectors and indices, if one or two of the stocks that are high concentration weighted are not participating, that doesn't mean that the overall index is going to roll over. Tesla hasn't been a part of the strength of the NAS all year. NAS doesn't care. The other 5 have been. Now we've got 4 out of 6. So think of it as a V6. All right, you got 6-cylinder engine. Now 4 cylinders are still firing away. 2 of them aren't. You're gonna get the same performance out of the motor? No, you're just not. However, it doesn't mean the motor can't run, and that's kind of the way NASDAQ is performing. 4 cylinders are firing, 2 are not. It's just not going to run optimally. However, keep an eye on the problem child here. That's my advice for NAS. And then, the rest of it's going to be, this morning I'm going to be day trading in the sector secrets room here in about 2 minutes. I'd like to see the NAS supported at the 34 EMA on the high. We might look at some QQQ calls for a longer term swing. I'd like to see NAS get above yesterday's close. There's a lot of things I'd like to see the NAS do, but it is, to start the morning, a little bit more bearish. Doesn't mean that I want to short, but I've got to be cautious that it's a little bit more bearish where it sits on the daily today. And by the way, Trish just reminded me that the live trading sessions for the indicator bundle are September 10 and September 13. So you've got a good bit of time to set up your charts and get used to the tools. And then we'll be trading together on the 10th and the 13th of next month. So really looking forward to that. We've never done this with the bundle before. So I'm stoked to be able to dive into these indicators across multiple asset classes and time. Because usually in a class, it's really very much a very specific time frame or time horizon or a very specific asset class. And in the live sessions for this, we get to really open it up. So I'm looking forward to that. All right. So next up, is there a better ETF for IYZ than IYZ for Cisco? So here's how we do it, Sean. Head on over to ETFDB. Go to the stock exposure tool, CSCO. Then focus on the higher volume ETFs. So IYZ is right there at the top. And then you're really going to want to click on some of these ETFs just to find out what their daily volume is. So here's your US telecommunications ETF. Cisco is extremely heavily weighted in that, but this is a ridiculously low volume. So IYZ is not going to be as influential, but it is going to be a really great way to understand the other stocks that Cisco sort of lumped in with. So yeah, I would generally speaking, I would say when it comes to Cisco, take a look at things like SMH and the QQQ. Yeah, I know they're not going to be way up on the list here, but I think SKYY might be an interesting one. XLK, right? So there you go. SKYY, XLK. Cisco's generally going to move with tech. It's generally going to move maybe sensitive to semis. Here's your QQQ weighting, right? And again, when you're choosing these ETFs, make sure you're looking at the volume, because sometimes it might be high weighted in an ETF, but there's no volume. Case in point, the IYZ. All right. Thank you for the question, gang. And just like that, that is a wrap on another episode of Charts and Coffee. I'm going to head on over to the Sector Secrets room now. We've got our weekly Wednesday Q&A, live trading, live watch list building session. Looking forward to seeing you there. In the meanwhile, check out the Workspace bundle. I'm looking forward to doing that live trading with you all. In the meanwhile, be good to each other. I'll see you tomorrow, same time, same station.